Welcome back to the deep dive. We think a lot about our own health, but what about those, well, silent partners in our lives?
Yeah, the pets, the farm animals, they're absolutely crucial, often unseen, but
Exactly.
a huge part of the economy, our daily lives, the
Yeah,
health of animals. It affects everything: food security, companionship.
totally. And that's why today we're taking a deep dive into Elanco Animal Health. We're looking at their 2024 annual report. Now, for anyone maybe not familiar, Elanco is a global leader in animal health. Their history goes way back, 1954.
Right, long heritage.
Yeah.
And their mission, they stated as go beyond, make life better. And the vision is food and companionship enriching life. So basically, they make products, services for preventing and treating diseases, farm animals and pets.
So our mission here, for you listening, is to really cut through all the corporate speak in this big report.
Yeah, we want to pull out the key bits of information, the insights, so you can get up to speed quickly on this really significant company.
Think of it as your shortcut to understanding a vital industry. All right, let's unpack this. We're starting with Elanco's 2024 performance, and it really looks like a business that's finding its stride. They closed 2024 with what they're calling accelerated business. They hit 3% full year organic constant currency revenue growth. Okay, so for our listeners, what exactly does organic constant currency revenue growth mean? And why is that 3% figure, important?
Good question to start. So organic constant currency,
Yeah.
it basically takes out two variables to give you a clearer view of the core business health. Constant currency just means they've adjusted for exchange rate swings, so you're comparing like for like across different countries.
Okay.
And organic means the growth came from their existing business, their current products, not from buying other companies.
Got it. So it's real internal growth.
Precisely. So that 3% isn't just random revenue increase. It shows genuine expansion from within.
Mm.
And it's noteworthy because it's definitely a step up from how they did in 2022, 2023, shows momentum. Plus, they mentioned 6 straight quarters of that kind of growth. That shows some real consistency.
6 quarters. Wow. Impressive consistency. And it suggests their strategy is starting to click, right?
Seems like it.
The report talks about solid performance across different parts of the business, different regions, specifically market share gains, global pet retail, U.S. farm animal.
Hmm.
What does gaining share there tell us about their momentum going into 2025?
Well, it signals a couple of key things. First, pet retail, that's super competitive. Gaining share there means their products are standing out, they're winning customers.
Mm-hmm.
Second, the U.S. farm animal sector. Gaining ground there shows their solutions are hitting the mark with producers. That's vital for long-term growth.
Right.
So put together, these gains suggest their strategic framework. They call it IPP, innovation, portfolio productivity. It's actually delivering results. Gives them a good tailwind.
So those investments are visibly paying off. Okay, let's talk bottom line because this is, well, it's dramatic. In 2024, Elanco reported $338 million in net income.
Yeah.
That's a huge positive swing from 2023 when they had a net loss of, wait for it, $1,231 million. Over $1 billion.
A really stark contrast, yeah.
For most people, going from $1 billion loss to a $300+ million profit sounds almost unbelievable. What drove that change?
Well, the main thing you have to understand, it wasn't strictly an operational collapse in 23 that caused the loss. That huge negative number, the $12,731 million, it was mostly down to a non-cash charge, a $1,042 million goodwill impairment charge.
Goodwill impairment. Okay, break that down.
So goodwill is basically an intangible asset. Think
Yeah.
brand value, customer lists, patents, stuff you get when you acquire another company. An impairment charge just means they had to write down the value of that goodwill on their books. Rising interest rates were a big trigger for that valuation change.
Ah, okay. So it wasn't cash flowing out the door.
Exactly. The key is non-cash. Didn't hit their daily cash flow. In 2024, they didn't have a similar big impairment. So that's the main reason for the huge swing back to profitability. It suggests things are stabilizing, operations improving, without those big accounting adjustments.
That makes a lot more sense. A critical distinction. So a clearer picture of their actual operational health. Their total revenue then for 2024 came in at $4,439 million. And the U.S. is still their biggest market. Looks like 46% of total revenue.
Yeah, the U.S. is definitely their anchor.
Is that kind of concentration? Is it a strength, showing deep penetration, or maybe a bit of a risk, relying so much on one market?
That's a really good point. It's kind of both, isn't it? I mean, the U.S. is a strong, mature market, gives them a solid base. But yeah, 46%. For a global company, it does mean that continuing to grow and diversify outside the U.S. is pretty crucial for the long haul. especially looking at emerging markets.
Right. Makes sense. Okay, so beyond the financials, what's really driving things, it seems to be innovation, their products.
Absolutely, that's core to their strategy.
They've got this massive portfolio, around 200 brands, sold in over 90 countries. Dogs, cats, cattle, poultry, swine, sheep, pretty much everything.
And that breadth is really important in animal health. It provides resilience. They aren't betting the farm on just one thing.
A classic diversification strategy.
Exactly.
Let's dig into the pet health side first. Parasiticides are big for them. Things like the Advantage family, Seresto, fleas, ticks, worms. They say they have one of the broadest portfolios there.
They do. It's a cornerstone of their pet business. But they're also bringing out new stuff.
Like Credelio Quattro.
Yeah.
FDA approved that in late 24, launched early 25.
Yeah, that's a monthly chewable for dogs. Covers fleas, ticks, heartworm, intestinal worms, all in one.
That sounds convenient.
Huge convenience factor for pet owners. Instead of juggling multiple treatments, it's one chew. That often means pets actually get the protection consistently. Better adherence, better health.
Yeah, I can see that being a big seller. Now, here's something really interesting. Zenrelia.
Ah, yes, the JK inhibitor.
Right. For itchy skin, dermatitis in dogs. Approved September 24 in the US, Brazil, Canada, Japan. But, and here's the twist, the FDA required a boxed warning on safety. Elanco thinks that slowed down adoption.
Mhm.
What does that tell us about, the realities of drug development?
It really highlights that tightrope walk, doesn't it, between innovation and safety regs. A boxed warning, or black box warning, that's the FDA's strongest safety flag, signals potentially serious side effects.
So even if it works well.
Even if it's effective, yeah. Zenrelia is a JK inhibitor. It targets specific immune pathways. But that warning means the FDA saw enough risk to require caution. And it definitely impacts sales. Vets, pet owners, they're going to be more cautious, understandably. Shows how much power regulatory bodies have in shaping how a new product performs in the market.
Fascinating dynamic. Okay, shifting gears to farm animals. What's happening there on the innovation front?
They're showing strength in U.S. cattle. Products like Experior that just got new approvals for heifers, which is a big segment, nearly 40% of fed cattle,
Okay.
and also rumensin. These are pretty foundational products for productivity and health in the beef industry.
Right. But the one that really jumps out, environmentally speaking, is Bovaer.
Ah, Bovaer, yes. Or 3-NOP. This is a big deal. It's the first feed ingredient of its kind, specifically designed to reduce methane emissions from dairy cattle.
Methane from cows. A huge climate issue.
Exactly. The FDA approved it in May 2024, launched in Q3. The potential environmental impact is substantial. Reducing livestock methane is critical for agriculture's climate goals.
A potential game changer. Not just for Elanco, but for the whole sector's footprint.
Absolutely.
But what are the hurdles to getting farmers to actually use something like Bovaer? Is it cost or just changing habits?
It's likely a mix. There's the clear environmental plus, but adoption, widespread adoption, probably depends on showing it makes economic sense for the farmer too. Maybe through better feed efficiency, maybe market demand for lower carbon milk. That's where innovation meets the real world, meets policy.
And all this R&D, it costs money. Elanco spent $344 million on it in 2024. Got over 1,000 people working on this stuff globally.
Yeah, it's a serious investment. And focusing on things like methane reduction shows they're looking ahead, aligning with these bigger global priorities, not just today's market needs.
Building for the future.
Precisely.
Okay, let's shift now. Talk about some strategic moves, how they're navigating the market. Big one was selling off their aqua business.
Yes, that was a major strategic decision.
Why sell off a whole segment like fish health?
It was very deliberate. July 2024 sold it to Merck Animal Health for nearly $1.3 billion in cash. And they used almost all of that cash immediately to pay down debt, reduce their leverage, lowered future interest payments.
Smart.
Yeah, and it also meant transferring manufacturing sites in Canada, Vietnam, about 280 employees. It's really about streamlining, focusing their money and effort on bigger markets, areas with potentially higher returns, sharpening the focus.
Getting leaner, more focused, makes sense. And speaking of manufacturing, there was another interesting move, reacquiring a UK facility.
Right, the Speak facility, that was November 2024, cost them $36 million. And the interesting part is why. It was owned by a former contract manufacturer, Triac Speak Ltd., which went into insolvency.
Ah, so a potential supply chain problem.
Exactly. Elanco stepped in proactively, bought it back specifically to minimize supply disruption for some key products.
Right.
Shows they're serious about controlling their supply chain when needed.
Smart defensive play. Okay, beyond buying and selling, they also did some internal restructuring back in February 2024. What was that about?
That was mainly about efficiency and shifting resources. They wanted to improve operations and specifically move some international farm animal resources over to pet health. They're anticipating some big global launches in the pet space, so they're positioning for that.
Okay.
It also had a side benefit of reducing their exposure to volatile currencies in places like Argentina, so could be more agile.
Makes sense. Of course, they're not alone out there. The report mentions intense competition globally. Zoetis, Boehringer Ingelheim, Merck Animal Health, plus generics, startups.
It's a crowded field.
And patents are always a factor, right? Things expiring.
Absolutely. Patent expirations are a constant reality. It's a critical challenge. For instance, Seresto's formulation patent. That runs out in Europe in June 2025, though some countries have extensions.
Okay.
Galliprant's active ingredient patent expired in most places back in 2021, and some big ones, like parts of the Advantage family, don't even have patent protection anymore.
So generics can just jump in?
Potentially, yes. It makes them vulnerable. It means they constantly have to innovate new products, better versions of old ones, just to stay ahead and protect their market share.
Highlights that R&D pressure. Now, another tricky area. Antibiotics in farm animals. That's often in the news. How's Elanco handling that?
Yeah, the antibiotic dilemma, it's sensitive,
Hmm.
and you really have to distinguish between two types. First, shared class antibiotics, the ones used in both humans and animals. Their revenue actually decreased 8% in 2024.
Why is that?
Mainly regulations, like the EU restricting preventative use in livestock, and also just consumer pressure, people wanting less antibiotic use in food production.
Mm.
But then you have animal-only antibiotics. Their revenue went up 4% in 2024. That's largely driven by things called ionophores. They're used mostly for feed efficiency in livestock. And critically, they're not medically important for humans.
Ah, so less regulatory pressure on those.
Exactly. Because they're animal only, their use hasn't been impacted as much by regulations aimed at preserving human antibiotic effectiveness. It shows a nuanced approach, adapting to public health concerns while still meeting agricultural needs where possible.
That distinction is really key. Okay, let's zoom out. Bigger picture. Risks. Oversight. Where Elanco is heading.
One big trend they're watching is how pet owners buy things. More and more people are going online to big box stores using telemedicine, not just going to the vet clinic anymore.
Right, the Amazon effect everywhere.
Pretty much. And that could definitely impact Elanco sales and profit margins, especially for prescription meds that traditionally go through vets. It challenges that established distribution model.
A common challenge these days. What about internal risks? Cybersecurity.
They seem pretty robust there. They have a dedicated Chief Information Security Officer, a CISO, a team focused on governance, risk, architecture, operations, detecting threats, responding. They follow NIST guidelines, which is a strong framework. And importantly, they reported no major cybersecurity incidents materially affected them in 2024.
Good sign. Shows they're proactive.
Seems so.
But like any big company, they face legal issues. What's on their plate there?
Yeah, it's a complex picture. There's always something. They settled those Seresto class action suits about deceptive marketing, took a $15 million charge in 23, paid in 25.
Okay.
Then, more recently, new lawsuits filed in 2024. Securities class actions related to Zenrelia and Credelio Quattro questions about safety, labeling, launch timing, plus related shareholder derivative suits.
So lawsuits from shareholders, too.
Right, where shareholders sue, basically on behalf of the company. And there's still ongoing antitrust stuff with a company called Tevra Brands, though Elanco won a jury verdict related to the Bayer acquisition part of that Tevra.
Ah, sounds like a lot to manage legally.
It's part of the territory for a company this size, especially in pharma. Constant scrutiny, inherent risks.
Beyond legal stuff, what about operational risks? Like relying too much on a few hit products.
That's definitely a factor. Their top 5 products or product families, they made up about 36% of revenue in 2024. The Advantage family alone was around 10%. So yeah, if something hits one of those core products, competitor innovation, bad press, regulatory changes, it could have a big impact.
Concentration risk.
Exactly. Plus, you have external factors, whether it affects parasite season, so that impacts parasiticide sales. Even human disease outbreaks can mess with demand and supply chains.
Lots of variables. And one last thing, corporate governance. The report mentions shareholder activism leading to board changes.
Yeah, a cooperation agreement in 2024 expanded their board of directors. It's a clear sign of that interaction between a public company and its investors. Activist investors push for changes, strategy, leadership, whatever. Expanding the board suggests Elanco is responding to those concerns, making sure governance reflects stakeholder interests.
Interesting dynamic. Okay, so wrapping up this deep dive into Elanco's 2024 report. What's the overall picture?
Well, we've seen a company that seems to be really hitting its stride again. Accelerated growth, that big return to profitability after the 23 impairment charge,
Hmm.
clear commitment to innovation, both pets and farm animals, bringing out new things like Credelio Quattro, and potentially game-changing stuff like Bovier for the environment.
But navigating challenges too.
Absolutely. Regulatory hurdles like the Zenrelia warning, intense competition, patent cliffs. They're actively managing all that. Plus, strategic moves like selling Aqua to Focus, buying the UK plant for supply security, restructuring internally.
And dealing with risks, from shifting consumer habits to cyber threats to all those legal battles.
Right. It really paints a picture of a major player actively shaping its future in this incredibly important global industry, an industry that really touches all of our lives.
It really does. Understanding a company like Elanco gives you such insight into that often hidden world of animal well-being, and it directly impacts us, our health, the global economy. Which leads to a final thought, maybe something for you to ponder. As human health and animal health become ever more linked, how might the innovations and maybe even the ethical debates happening in animal health, how might they shape not just how we relate to animals, but maybe our very definition of well-being for everything living on this planet?
That's a deep one. Definitely something to think about, that interconnectedness.
Indeed. Until next time, keep digging deeper.